Okay, ladies and gentlemen, today we have Gary Savage back on the show. And today we will look at the US economy, commodities, precious metals, and many other very interesting topics. So, Gary, thank you so much for being here.
Well, thanks for the invite.
It's a pleasure to have you back, Gary. If we could dive in straight into the precious metals first. So, if we could talk about gold and start by looking at some of the main drivers. So, I've been talking to many people, and there's different sides. So some believe it's still the big players, the central banks that are driving the price, but others believe it's more on the retail side. How are you viewing this market right now?
Well, my opinion is we're entering the bubble phase of this 25, 26 year bull market. That's generally driven by like retail mom and pop traders, people that are seeing their neighbors get rich from buying gold and silver and they want to get rich, so they start buying. Those kind of unsophisticated investors and traders generally they're FOMOing in. So they're just hitting the ask. And as the spreads get wider and wider, as the market gets more and more volatile, hitting those wide spreads, those wide bid ask spreads, is kind of what drives the bubble phase. Now, I don't think we're like going to end tomorrow or anything. Usually, when the public kind of starts to take notice, which I think they did once gold went above 4,000, you've generally got about a year to a year and a half before the last mom and pop trader buys, and at that point there's nobody left to buy, and generally price will be stretched really far above the long-term moving averages, and that's the kind of the setup for a market crash. So I think it just started a few months ago with the public coming in. So I'm going to say we've got till probably mid 2027, maybe even out to early 28 before I would be looking for a final top. But I do think you don't want to get married to a narrative, and there's always a narrative at all, even these any rally that lasts a long time, whether it be like an intermediate rally that lasts 3 months or a bull market that lasts, in this case, 20, 26 years, there's going to be a narrative for why, price can never come back down. And you don't want to buy into those narratives because that's how you get caught at the top of a bubble. So there are some signs I'm going to be looking for here in the next year or so to tell me that we're getting close, it's getting dangerous, and we need to start thinking about selling our precious metals. And you'll have to ignore the narrative at the time. The narrative will, of course, be that the dollar is going to collapse and we're going to hyperinflate, or whatever the narrative happens to be. Central banks are buying or Asians are buying. I've heard it all, and it's just a narrative. Uh, all assets go from extreme undervaluation to extreme overvaluation, and at some point, gold is going to get extremely overvalued, and when it does, it'll be time to sell your gold and silver and look for something that's undervalued.
I would love to go a little bit deeper into that, Gary. So, of course, it's very difficult to pick the very top, but what would be some of these sentiment indicators that you would look at? Would it be something as simple as, everyone talking about that asset, all the news talking about it, or would you also look at things like maybe GDX inflows, outflows, maybe things like junior mining performance, because usually, all this hype goes into that sector.
Yeah, when you get into a bubble, the really crappy companies that have no prayer of ever pulling any money or any gold out of the ground will start to go crazy to the upside. That would be one thing. But generally, what I want to or what I will focus on is two ratios: the Dow or the gold silver ratio and the Dow gold ratio. Um, when the gold silver ratio gets, I think it's probably going to go somewhere between 20 to 1 and 30 to 1. So when that ratio gets to that level and silver is going crazy to the upside, you're pretty close to a top, close enough to where you want to be careful there and not get caught when the top comes, because you could literally lose 30% in one day when the bubble pops. So you don't want to get caught at the top. Also, the Dow Gold ratio. Some people are suggesting this time it's going to go 1 to 1. I think at the last bull market in 1980s, maybe it was 2 to 1. I think maybe the Dow is probably a little too high at this point for it to get to 1 to 1, but I think it could get to 3 to 1 or 3.5 to 1, something like that. So that those two ratios are going to be my main focus when they get into those target zones. That's when I'm going to start selling. And then you'll also like at the top of the housing bubble, I'd be sitting in a restaurant and I'd hear people, at the table next to me on their phone making real estate deals, and you knew that these people were just the average Joe. They had no idea what they're doing. So when I hear that same kind of stuff going on in the precious metals, that's also another clue that you're pretty close to the top, and you need to be selling your gold and silver and looking for something that's undervalued.
Right. And if we look at the stock market, so how would you expect stock market to perform in the next while? So would it be flat and just gold performing really well, or do you believe stock market will have to go down for that to occur?
Um, well, the stock market is getting a little mature in its 4 year cycle. So at some point here, we're going to have a big correction. Now, I don't know that that's going to be a final secular long-term top in the stock market. Um, we had a top in 2020, but it didn't end. The long-term bull market led to a big, huge correction. That was a 4 year cycle low. And we had another 4 year cycle low as a short one in, I think it was August of 22. Um, Usually a long cycle will follow a short cycle. So if that last one was a bit short, this one might be a bit long. So I'm going to say we're probably going to get one of those really deep corrections. We might go we might correct 25 to 35%. Um, and maybe instead of in 2026, maybe it comes in 2027. But I don't think that's going to be the end of the bull market. The new paradigm for this bull market, the technology that is leading is AI and robotics. It's like the personal computer and the internet was the new technology that led that to that top in 2000. The bull market lasted from 1980 to 2000. This bull market's a bit short. It's only 16 years. The last two long-term bull markets lasted 20 plus years. Um, the last two bull markets tacked on they gained about 25 times. I think the S&P is only about maybe a little over 9 times right now. So it's a little short in duration and a little short in magnitude, in my opinion. So I think what's going to happen is we're going to get another one of those big, scary 4 year cycle low corrections, 20, 25, 35%. And then we'll have another leg up, and that leg will probably give us the parabolic, quote unquote bubble. And that'll be the top of the bull market in stocks. So um, I think we got a ways to go yet, although we are getting mature in this leg and going to be due at some point here to start the move down into that 4 year cycle low. And it takes a while for it to get there too. So you've got to allow time for the declining phase of the bull market. So even if it was to bottom in early 27, the market might top in mid 26, and then it takes maybe a half a year to 3/4 of a year to find that final bottom, and then we get that final rise into the long-term bull market top.
Right. And would that decline in the stock market potentially create last opportunity for gold? Because usually, initially, everything goes down if things go down rapidly, or do you would expect actually the opposite capital rotation to occur from the stock market and fuel gold even higher?
I think that's probably what would happen. I think the dollar will probably be going down at the same time. So at some point, a lower dollar becomes a bit unruly, and that's going to be bad for stocks. If it's going down in a controlled fashion, that's usually good for everything. Now, I will say that Bitcoin and oil have both entered the declining phase of their multi-year cycles, and they're probably not going to recover significantly. But um, a controlled decline in the dollar is probably good for stocks. It's good for the metals, most commodities in general. But if the decline in the dollar gets unruly, which it will when we near that 3-year cycle low, then stocks are not going to like that, and gold should go crazy to the upside. So my feeling is probably um, when stocks drop down and complete that final 4-year cycle low, it's probably going to coincide with the dollar um, moving down into its 3-year cycle low, and that'll send gold into and silver into the stratosphere. But then they will be severely overvalued, and stocks will be severely undervalued, and that's the point at which now I reserve the right to change my mind if I see something different at the time, but I think that's going to be the point at which you want to sell your gold and silver and buy stocks.
Mhm. And all this will likely be fueled by continuous money printing and inflation because that's how governments try to solve all the problems, right?
Correct. Yeah, I think Powell has started cutting rates a little too soon, and I think we're going to have another surge of inflation. It may be controlled somewhat by oversupply in the energy markets because oil is the main driver of inflation. And I don't see oil going crazy to the upside. I know some of the big name investors are wanting to buy energy stocks right now. I think maybe they might be a little bit early. Um, and even if you do get the bottom, I suspect it's not going to be, it, when we get the bottom, I don't think it's going to just take off and rocket launch higher. I think it'll be one of those bottoms that kind of churns and grinds for maybe even a year or more before it starts to really get some upward momentum. So at some point, energy will be a good place to be, but I think it's going to be tedious and hard to hold on to the position for a while yet. And we may not have even created a final bear market bottom just yet.
And as we are sort of waiting for this final run in gold for this cycle, would you expect volatility to increase? So you would have this huge rises and then deep downwards movement as well?
Yes, I do think volatility is going to increase. I think we're in the acceleration phase, or just entering it as silver has broken out above the 1980 high. It went to 54 and then it came back down. We dropped, I think, to maybe like 49. So basically tested that $50 breakout, popped right back above it, and then dropped back down to test it again. So it's tested that breakout level twice. I don't think we're going to test 50 again. I think we have entered the acceleration phase, which, like I said, probably lasts year to a year and a half, maybe 2 years tops. Um, but as the the parabolic phase gets underway in earnest, it will get more volatile. Price will stretch quite far above the moving averages. There are going to be serious profit taking events where people get nervous, and you could literally have 10%, 20% down days or a couple days in silver, which is going to make it really hard to hold through that. So this past year was pretty easy. The corrections were uh, non-existent or very short and shallow. I think 26. I think the the gains are going to be bigger, but it's going to be harder to hold on to because I think it's going to get more volatile.
And Gary, do you have a certain estimates of how far they could go, both gold and silver?
Well, I'm on record that 10,000 is probably going to be a piece of cake in gold. If you just get to a 30 to 1 ratio, gold to silver, you'd be looking at a little over about $330 silver. Um, there's been so much suppression in the metals market for so many years that I think there's a good chance it's going to overshoot my targets. If gold were to get to 15,000 and silver were to get to 20 to 1, which I think is not unreasonable, I think we could see $500 silver, and it could occur quickly. Silver tends to, it's kind of slow during the beginning of a cycle, and then towards maybe even just the last 3 months, you can tack on 200 and 300% just in the last 2 or 3 months. So my my kind of tentative target for this year, I think we're going to get to 75, at least $75 silver during this intermediate cycle, which is just kind of started here. And we might even get to 100. Um, and it could take another year to get from 100 to 200, and then it could go from 200 to 500 in the last 6 to 8 weeks of the bull market. And that's where you have to be very cautious because it could go to it could go to 500, in 6 to 8 weeks, and then it could go back down to 300 or 200 in a week. So you can't get caught at that top.
Right. And Gary, do you think those suppressions from the banks are still there? And if they are, do you think they matter now? Because the way I sort of look at the banks, they want to make money, so they will suppress to the way that favors the trend. So how are you viewing this whole situation?
So I'm on record. The suppression in the gold market ended last year when they tried multiple times to drive gold back below 2,000. They couldn't do it. Got caught in a huge short squeeze, and you can see what happened. Gold has gone from 2,000 to 4,400 in a year and a half. Um, the suppression in the mining stocks broke this year as well, and they've broken out significantly above their 2011 or 2010 highs. I think the suppression of the silver market broke when you look at the chart, you can see it's pretty clear. They tried for weeks and weeks and weeks to prevent gold from getting above 33. Once it broke above 33, um, hesitated for a little bit at whatever it was, 37, I think. I'm guessing here it's 35 or 37. It hesitated for a little bit right in there, but then once it broke out of that, it made a beeline up to 50 and then $54. So, there will be some temporary suppression attempts from time to time, but I'm going to say the banks have lost so many billions at this point that they've got to be very cautious to try and push this down any further. So it may create some volatility from time to time, but I don't think we have to worry too much about any significant or serious suppression in the metals market. They've just lost too much money trying to hold metals down at this point.
That makes a lot of sense. And Gary, once we do reach this top, what would you expect to happen for the next few years then, after we have this blow off? What happens then?
Well, you'll have a crash. If we get a big parabolic move higher, you'll have a crash. And then there's usually some kind of a counter trend rally as the dip buyers try and buy that dip. Um, but 9 times out of 10, the echo rally will not be able to make a higher high. And then you'll start a long process of moving down into a final bear market bottom that could take several years to get to that bottom. So that's kind of what I expect to play out. If we get a big parabolic move higher, you can just, you know, bet the farm that you're going to have crash. So you want to, at some point, you got to control greed and make sure you don't get caught in the crash.
And are you trying to sort of already predict maybe what you would rotate your capital into? So of course it's difficult to know what's going to happen then, but maybe would it be maybe commodities, things like copper, or it could be anything?
Well, as I said, if the Dow gold ratio goes to 3 to 1, it means that gold is really overvalued, and it means that Dow is really undervalued. So if I see that, I will probably go into stocks. Um, Now, without a crystal ball, you can't tell for sure. Maybe there's something else that looks more appealing to me than stocks at that time. But right now, that would be my tentative plan. Is if I see that Dow gold ratio uh, at a really low level, then probably I would be looking to buy stocks with the expectation that the secular bull market in stocks would have at least one more run higher, and probably would have its own kind of parabolic bubble phase during that run.
Hmm. And Gary, so would you do you believe that mining stocks are sort of the best place to be right now before that blow off?
Mining stocks?
Hmm.
No, miners have already put in a big move. It's time for silver to catch up. So I want to be in silver from, I mean, you can be in all three. You could be in gold. I mean, I have physical gold, I have physical silver. I don't have any trades on in the miners, but you sure certainly could trade that as well. But I would definitely have some silver or SLV uh, uh, as well because I think that's what's going to outperform during the final part of this bull market. So I'm mostly focused on silver right now, even though you could certainly just have a diversify and have all three.
Yes, because the way I sort of look at it, if you look at the junior mining stocks, they haven't reached the previous highs yet. So even from that perspective, sort of, I use it as a sentiment indicator in a way. But so you don't think that the risk to reward is as good in that sector than in gold or also?
I don't. Some of the reason they're not at their old highs is they've diluted their stock so much that I they probably will recover those um, all-time highs, but it's not what it looks like on the chart that, oh, these are just massively undervalued. A lot of it is they just diluted their stock so much over the years that it's going to be a little bit harder for them to get back to the all-time highs.
And do you guys have view on Bitcoin and what's happening with the cryptocurrency right now?
Pretty sure Bitcoin has formed its 4-year cycle top. Um, it's probably got about a year to go, so it's it's most likely in a I'll say a cyclical bear market. Um, so there will be violent counter trend rallies that'll make the crypto bugs think that that here we go, we're going back to new highs, but um, what happens is it rolls over before it can make a new high, goes down, makes another lower low. So you get on the slope of hope, so to speak. Every rally, looks like the beginning of a new, you know, trend that's going to take Bitcoin to 200,000 or a million or whatever the target you have in your brain that it's going to. Um, but it just doesn't make a new high, and then it rolls over and makes another lower low. Um, So, like I said, I think we got about a year to go before you really want to get, look at crypto seriously. And it's a pretty volatile asset. The last several of these 4-year cycle lows, they can shave off 60, 70, 80% of the value. So, it's not unreasonable to think that Bitcoin could get down to between 20 and 50,000 before we get a final bottom. And then at that point, that would be, maybe that might be what I want to look at when, when we see a top in gold. But I think you got a while. I think you're just going to have to be patient for a good while before it's time to buy Bitcoin again.
And do you guys see Bitcoin as sort of play on demographics? So we know that young people are pretty much interested in it, and if that continues, that should be in a way bullish for the Bitcoin for the long term.
Oh, that I can't really speak to. I do suspect that older people like me are more focused on the metals as a way to protect the purchasing power of their wealth. And and I think I think Bitcoin has just gotten a lot of hype over the years, and it's made some spectacular gains. So I suppose that the younger people, that's probably where they're focused. Unfortunately, I think those people are going to lose a lot of money here in the next year trying to, you know, pick a pick a bottom in Bitcoin prematurely and getting stopped out over and over again. So you may be correct on that one. It may be a more of a younger person driven market.
Mhm. If we could go a little bit into portfolio structure, Gary, so I would assume that you would not be a fan of 60-40 portfolio structure, right?
No, not really. Bonds are in a long term bear market, so I don't want to own bonds. Um, I mean, it's pretty obvious when you look at the chart. The charts of gold and silver are going from lower left to upper right. We've, we've collapsed the suppression in the markets. Looks to me like we're in the acceleration phase, the final phase of the bull market. So I don't see really any compelling reason to diversify away from a very strong bull market until I think it's extremely overvalued. And at that point, then we'll look for something that's undervalued. But I'm not a fan of 60/40. Maybe for somebody who doesn't really understand markets, even then, I don't know why you would want to go into bonds during a bear market. So, um, maybe if you wanted to diversify into into metals and stocks because they're both in a bull market, I guess you could do that. But the percentage gains are just so far above the stock market in metals. I don't see any compelling reason to put part of your money into a really much slower moving asset when you got one that's moving strongly and still clearly in a bull market.
We've covered a lot, Gary. Is there anything else that maybe you would like to mention in relation to the precious metals and all this sector that we haven't covered yet?
I think we covered it all. Mainly I'm just focused on silver, and I've given everybody the clues that I want to look for to tell me it's time to get out of the way so I don't get caught in the bubble pops.
Right. Gary, these are all the questions I had. Thank you so much for your time.
Thanks for the invitation.